The question is, do I wait for a retest or a pullback to the trend line before I take a trade or before I actually place a trend line trade? And the answer to that is no. That is a very low probability setup. Now, I know that social media is telling everybody to wait for the retest of the trend line. Now, there's three different things that happen when you wait for the retest of the trend line. So let's get rid of this. We'll get back into what the drawings were. But when you're looking for a retest of a trend line, like I said, there's three different things that happen. You've got your trend line, you've got the market doing its thing, and then it breaks the trend line and you get a few candles that print. If you're not going to get into the trade until the price comes up to retest the other side of that trend line and then go down, again, there's three things that could happen. You could get this. This could be the case, but that is a very low probability. That is a 1 in 8 chance that that actually works. What is going to happen is, more likely, is if you get that pullback to the trend line, the price is going to keep moving back. If you get that pullback to the trend line, that is most likely a fake breakout. It is not going to work. You've got the false breakout and the trend is going to resume back into the direction it was before it hit that trend line. Now, the other option, the one that usually works out, is once you get the break of the trend line, that market wants to continue to move down. It might make a little bit of a pullback, and that's normal, but having the pullback all the way to touch that trend line, that is not normal. That is not something that happens most of the time. So if you're looking for the pullback to that trend line, you are either not going to be taking trades or you're going to be taking losing trades. Now, there is something that I do pay attention to when I'm looking at trend lines, and that is the market structure. And that takes us back to the illustrations that I was looking at. We're going to go through this. We're going to go through this chart. I'm going to draw trend lines all over the place just so you can see how this works. I don't want to be saying this stuff without any kind of backup or evidence. Now, when it comes back to those social media posts, anybody that trades for any length of time looking for that particular setup knows that that is not how this works. They know this because when they show that setup, they have to look through a bunch of failed versions of it to find it. They'll find 6, 7, 8, 9 versions of a trendline break that does not do that to find the one exception. Now, when it comes to trend lines, I want to associate the market movement with that trend line. And this right here is why this trendline break didn't work. We've got a market move away, pulls back, away, pulls back, breaks the trend line, but there's no continuation and it continues to move back into that trending direction. And one of the big reasons for that is the size of these gaps. I'm looking at the gap versus the trend line. When I have a market that makes a big gap followed by a smaller gap and then a break of a trend line, that is much better. This first gap is going to be bigger than the second gap. What we're looking at is kind of a momentum thing. We've got big momentum the first time and we've got less momentum the second time, which encourages the continued move to the downside. And if we get the opposite to that, we have our trend line, price has bounced off it, made a gap, pulled back, made a bigger gap, and then come to the trend line. What's happening is this market move back to the trend line has to be much bigger. It's a bigger market move, meaning more of that momentum is being used up just to get to that trend line. When this happens, you may get a break and then a pullback towards the trend line before it continues to move down. But generally, you'll find that you'll just get a reversal and it goes back into that trending direction and we don't have an actual break of the trend line. We can illustrate it in a different way. You have the market making a small high, making a bigger high, making a break through the trend line, and then it makes that pullback and then it continues. And then this becomes the trend line. You've got the big gap, then you've got the smaller gap. And that makes for a much better trend line. And what I want to do is I want to show this to you. We'll go through this and take a look at some trend lines. We're going to look at a trend line after the market has moved and we'll see the setup of the market leading into that. So what we've got is this one here that sparked that initial question. So we've got this small gap and then we've got a bigger gap. Price breaks through that trend line. Like I had mentioned before, if we were waiting for a pullback to that underside of the trend line in order to take a short trade, this is something that wouldn't work. We would not make money on this trade. We would have lost this trade. And for me, blindly entering just because we're at an area is not a good thing. I will not be taking a trade just because we got to a certain point. I'm looking for a confirmation of some kind. I'm not just going to take a trade short just because we get into this area. I need a candle pattern. I need some reason to justify taking a trade in here. Now this one doesn't work because we've got this lopsided pattern in the market. We're going to take a look at a few different market moves and throw trend lines on them and see what trend lines work. So we're looking at areas where the market moved as a result. So we're also going to take a look at how the market moved after it broke the trend line. There are indeed going to be a few times where the price does bounce off of the trend line, but you're going to find that that is not a normal thing. So the first one we've got, I don't need my pen, I need the trend line tool. We've got one right here, and this you could justifiably say bounces off the trend line. We get this break to the upside, the price pulls back, and it bounces off this trend line. Now, this is one that you'd have to look for in order to use it as an example on social media. You'd have to look for this one specifically because this is not normal. This one does do that, but you'll find that this will be the 1 in 8, the 1 in 10 that actually does do this. Now, the next one is we get this little move to the downside. And if we draw a trend line under this, we see we get the break of the trend line, we get a nice move down, and nowhere do we get the pullback to the trend line that would justify us waiting for this. The pullback to the trend line happens way over here, but at that point, it's not really even the trend line that the market's looking at anymore. We're just in a new trend direction. And another question is, how many times should a market touch a trend line to make it a strong trend line? Now, again, this is another thing that you're going to hear: a minimum of 3 touches, a minimum of 4 touches, and so on. That's not the case. You don't need to wait for a touch 5 times in order to make that trend line a viable trend line. The fact of the matter is, the more touches you have to a trend line, the weaker that trend line becomes. So if you've got a touch and then a touch and then another touch, this multiple set of touches does not make this trend line more explosive. It does not make it more likely to bounce. It makes it weaker. It means every time it touches it, there is less and less of a likelihood that the price is going to bounce off of it, and it is instead going to break through it. Now, you don't need to have 3 touches, 4 touches, 5 touches to have a good usable trend line. I don't do it that way. If you do choose to do that, that is fine. There's nothing wrong with that, but that's not the way I use the trend lines. So let's take a look at some more. So we've got a trend line from here to here, and here we get nice 3 touches, 1, 2, 3. So we've got 3 points of contact with this trend line. We get a break below that trend line. This candle closes below the trend line, and we do not have anything in the way of any kind of pullback that gets to that trend line. We get a little bit of a pullback in here, and that is 100% fine. That is the way the market moves. You're going to get that zigzag. You're going to get that market wobble as it progresses. It's not always going to break down and just drop or break up and skyrocket. You are sometimes going to get this. But the signal for this kind of trend line would be the candle closing underneath the trend line. And for me, I'd like to place a trade underneath the low of that candle if we're looking for a short trade. And this swing high would be the initial stop loss. And then from there, you're aiming for whatever your target is. So let's take a look at some more. We're looking at areas where the price moves past the trend line. We could be looking at a spot in here. We have the low followed by a higher low, followed by a third higher low. So what we get are 3 touches. These are really nice. We get a big gap, we get a smaller gap, and then we get this little gap in here. And the price breaks down, and it does make a little bit of a pullback. But again, the stop loss would be above this swing high, and off we go. It makes a bit of a pullback, and then it tanks. And another one be in here. We could have this low followed by this higher low, and let's draw that all the way through. And this to me becomes a little more suspicious. I'm not eager on taking a trend line trade like this because we have a small gap followed by a bigger gap. Now for me, this doesn't work. I don't like this setup. Now there is an extra trend line that we can draw inside of this bigger gap. So if I start at the low and I use this low here, we get to see that the price gets all the way through. We get this low, and this one does not close below. So we've got this new adjustment we can make. So we've got this low. So now we've got a big gap followed by a smaller gap followed by a little gap. And when the price closes below this, we get this move down. Now, this particular instance, this is something called the 2 trend line trade. We have the major trend line, which would be the one that is flatter. And then we have a minor trend line. And you get a break of a minor trend line, it tends to want to pull itself down to that major trend line. So this is an established trade type. This is the 2 trend line trade, which is nice to be able to get to see in this video. Market moves up. Let's do that again here. Price underneath the first and we get this market move this way. Now, this is not a trend line that I like. We have these 2 points of contact in the beginning that are very close together, and then we have this wide gap in here before the price comes back down. I would like to see that the price comes to that trend line with a kind of a rhythm. Has this nice touch, and then a space, and then a touch, and then a similar kind of space. Now, if the gap is bigger, of course, that space is going to generally be bigger, and if the gap is smaller, that space is going to be smaller. But this just doesn't look good to me. This is not a trend line that I would be happy to trade. But what happens is as this price moves, we get this kind of low area in here. So I'd alter this trend line. I would go from this low point, and then I'd be looking at something like this. And now I've got a trend line that makes more sense to me. I've got a trend line with a bigger gap followed by a smaller gap. And then we get this move down. And let's look at this. We'll start at the top and we'll move our way down. So this becomes a nice area for a potential trade. We've got a big gap followed by little gaps, and we get the close above the trend line. Now, this is a nice situation where the price hasn't left the trend line yet, and I do want to put my orders above the high of that candle in order to take a trade. So in this case, that trade never gets triggered. We don't get an instance where we get into this trade. So this becomes more of a fake out. And with that pullback into this area, I would readjust that trend line. And with that trend line readjusted, again, we can see we get this nice big gap, we get a smaller gap, and yet even a smaller gap. And then ultimately, the sideways market is what breaks through the trend line, but we do get this big push up and the market continues to move up. And if we're looking at the trend line in here, what we're seeing is a big gap followed by a small gap, close below the trend line, the market drops down. Now, there's very few instances that we see where the price tries to come back up and touch that trend line. There is no retest. That is not something that happens normally, so I'm not looking for it. I'm just looking for the orientation of these gaps. I want a bigger gap followed by a smaller gap. And then if I get that orientation and then we get the break, that is generally the signal that we need. We don't need to get too fancy with this at all. I know there are trend line traders that trade only the trend line. And the more successful they are, the more you're going to find that these gaps are very important. The order, the size of these gaps. So we can keep doing this. This is going to be the same kind of thing that you see on every currency pair all the time. Now here, we've got a situation that I don't like. So I wouldn't be using this trend line method on this, but I would make an adjustment. All right, so we're taking a look at a low and then a higher low. I'll connect these with a trend line. And what I'm seeing is a small gap and then a bigger gap. So when we get this close below the trend line, would I be looking to take a trade here? Probably not. I am not that interested in this one yet. Now, again, if I do place an order here, my order would be underneath the low of this candle that broke through the trend line, and it doesn't happen. We don't get that trend line trade. And we do get a bit of a pullback in here, which again is normal because of the distance this market had to move to close that big gap. So if I readjust this, I could use this initial low, or I could readjust that initial low to over here. So I've got one low and I've got two lows. And now what we see is the proper orientation of the gaps to qualify this as a good trend line trade. So we've got the big gap followed by a small gap, the close below the trend line, and off it goes. Now, this is something that we could do all day, and we're going to see the same thing over and over again. We're going to see that the market does the exact same kind of patterns over and over. And when we're looking for a tradable trend line, we're going to notice that these market moves are going to be very similar. We've got the high, we've got a second high that we're going to attach. Now this one opens up above and then drops down below, so we're not going to pay too much attention to this one. But again, we get this big gap followed by a small gap. We get the close above the trend line. There is no pullback to be found. This does not happen. We don't get the close. Even if I adjust the trend line to accommodate the open of that candle as opposed to the high, I suppose that would be the high. But we get this big gap, smaller gap, close above, and the market continues. So if you're looking for a pullback to a trend line in order to take a trade, you're going to find that that just doesn't work out most of the time. And again, we've got an area in here where the market has taken off. So we'll take a look at the trend line for that. I know this is getting boring at this point because we're just doing the exact same thing over and over. We get the big gap followed by a smaller gap, price closes above that trend line, does not get to this low. You could call this a pullback to the trend line, but I would not. What we're talking about typically is a market move away and then back again, not part of the actual noise. This is just the market noise as the market is progressing. That's not something that we're too interested in. What we're talking about as far as a pullback is a market that moves away, then pulls back, and then bounces off of that trend line. Now, we have seen an example of that, and we do know that that can happen. That can occasionally be the case. That is not usually the kind of trade that's going to happen, the kind of trade that is going to make us any kind of money, because again, that's a low probability trade. Now, when you are looking at the trend lines, the trip over that trend line is usually a result of a pullback, and that pullback now is the market reorienting itself into that direction. So we get this pullback in here. Market doesn't have to go too far to get over that trend line, and then from there we're looking for the trade because we've got the pullback that we're looking for, and this trend line is just the trigger for us getting into that trade. Right, so I hope this makes sense. Trend lines are great tools if you use them right. If you're looking for a trend line as an entry off of an underside or a topside bounce, a pullback, a retest as it were, then you're going to be limiting your trades terribly. You're going to be missing most of your trades, and the few trades that you do take are going to end up being losing trades. It's only going to be the odd occasion. Like I said, 1 in 8. We came across one that worked really well, but the odds are that this scenario where you have a trend line, market breaks through that trend line, pulls back to the underside and tags that trend line and moves down. These are very, very rare. They don't happen often enough to be a kind of signal that you're actually looking for if you're going to trade a trend line.